What's up, everyone? Thank you all for tuning in. I appreciate it a lot. Let's get into backtesting ICT's market maker model. I'm going to bring it up here. Let's put on some study music. We are just going to lock in right now and we are going to backtest USD JPY. What I'm going to do first, because I am a weekly trader, I'm going to do my best to walk you guys through what I do and everything, but I'm also just gonna lock in, so try to just follow along. So on the 4 hour, I'm gonna go back in hindsight and I'm gonna see the furthest time back that we could possibly do. We already back tested this area in a previous video, so let's actually bring up GBP USD. No idea what's going on. Let's go back in time to the furthest point we possibly can. And this is great if you don't have the paid trading view plan. This is for like the free plan. This is what you can do. So I'm a swing trader. I'm going to get my bias off the weekly and we're going to kind of go from there. We're going to look where opportunity was. So first things first, this is where the 4 hour allows us. Okay. So let's read what price is currently doing. So what I see is I see price tapped into weekly up close candle order block. At that point, we can identify too that this was also, if we're measuring from this range high to this range low, this is also within an optimal trade entry. So what I'm going to do is I am going to drop to the 4 hour and we're going to go to that point. And let's bring it up right here. This is the area tapped into it right here. And this is within optimal trade entry. It kind of went outside of optimal trade entry, truthfully, because it's from 68 to 79. And so right here, what we're looking for is the last 3 candlewick swing low. And we're looking for displacement below it. And every new 3 candlewick swing low that gets created after. So right here we have it. And what I'm going to do after we find entry and everything is we're going to go ahead and just log this and back test it, right? Like in the back test journal. So right here, we have this failure to sweep liquidity, market structure shifts, creates this mitigation block is what this is, creates these fair value gaps. And right here, this is where we would look for opportunity. We have multiple PDAs. And so since there's multiple PDAs, if you're comfortable with risking 1%, I'd break that down into, because these two are overlapping and they're pretty much the same entry whenever price taps into both of them, I would break it down into two. So 0.5 would go down here and then another 0.5 would go down here. That's how I would approach trading. Now, obviously, the other 0.5 doesn't get triggered, and that's all right. That's all reality of trading. Right here is my first entry, and my stop loss would go above all 3 PDAs, okay? So with that being said, 0.5% went down, and you can see that we hit 1 to 2R. We target 1 to 2Rs. Now we're set up right here. Boom. It's more so a swing setup, right? And so what I'm going to do is I'm going to go, what was that? What was that date of that entry? Let's go back to it. So we are going to, it happened right here at January 17, 2022. So we're going to go into our backtesting journal. And what we're going to do is we're going to create a new page inside of this one. And we're going to do GBP USD January It was 22nd. No, it was 2022, but it was January 17th, 2022. 17th, 2022. And then we are going to write the time as well, which is going to be 1 a.m. Eastern Standard Time, EST. And what we're going to do is we're going to write our pre-trade thought process down. And what I was thinking here, so I'm going to go ahead and write that price on the weekly time frame has retraced into internal range liquidity, tapping into a bearish order block. Same time expecting optimal trade entry, 79% fib level. Okay, and so right here, I'm going to write here pre-trade thought process, and I'm just going to copy this, cut it, and paste it. Boom. I believe a sell opportunity is setting up, period. And then from there, what I'm going to do is I am actually going to take this picture right here. Let's delete this real quick. And I am going to download this image, save it, and I am going to insert image, and I'm going to upload a file right there. Boom. And so now what I'm going to do, I believe a sell opportunity is setting up where we can drop to the 4-hour and look for a market structure shift bearish with a change in the state of delivery or some type of reversal. Okay. So now we're going to go to the 4-hour. Now, the only thing that I can't note in this situation are my emotions, right? Emotions aren't truly at play at the moment because we know already what happened. All we're doing is like target practice. This is considered target practice to me because we are finding where opportunity was and we're seeing what happened and we're training our eyes, our intuition to then understand how price reacts at these key levels so we can look for it in live action. And in live action, whenever we live test, this is back testing. And whenever we live test, that's whenever we apply everything we've learned from back testing. And this is in live test where we feel true emotions, and that's whenever we're able to journal our emotions and we're able to alleviate any type of mistakes that we may have, right? And so right here, what I would do is we are going to type right here, dropped to the 4-hour as soon as price tapped into OTE area. There was also like a little fair value gap right there, as you can see between here. That price also respected, right? Also noticed on the weekly time frame that price was respecting a bearish fair value gap, order block, and OTE. This is when we dropped to 4-hour time frame to look for entry. Now I'm going to take that 4-hour, download that image. We're going to insert the image here. On 4-hour had a market structure shift bearish with displacement, creating bearish PDAs, right? Bearish premium discount arrays, meaning the fair value gaps, right? It displaced, market structure shifted, created this fair value gap, and this fair value gap also created this order block area. Bearish PDAs and disrespected previous bullish opposite PDAs, right? Because there's this fair value gap right here that price closed through right there. There's also this one right here. It kind of closed within it, so that's kind of a risky trade. You know me, I kind of like to see it like close below multiple ones, but you know, you can kind of see what worked out here. And in that situation, maybe we just stick to this and like that's where we manage risk, but we don't know yet. We're going to go ahead and continue back testing and get a little bit more data. Opposite PDAs presenting a reversal opportunity period. We were okay risking 1% because there were 3 PDAs and 2 at the same entry price. We split it up. DCA I have. So 0.5% was placed as a sell limit at the first PDA, aka the FG that got tapped into. The second 0.5% was placed at the other 2 period. Stop loss went above all 3 PDAs and take profit set at 1 to 2 or see, price did not retrace deeper to trigger our second 0.5% entry. However, it did hit take profit to 2R. And how long did it take? Let's see. We want to know that too. So from here, boom, and it hit take profit on this candle here. It hit 4 days. Oops. It hit 1 and 2 R in 4 days. Entry happened during London session 1 a.m. EST period. And now I have a little journal template here. I want to make sure that I'm going over it correctly. And let's write down our entry price and stop loss. Entry price, stop loss price. Plus 1% gained. And we are going to write up here okay, so this is the first one. Okay, cool, so that's the first one. And now we're going to look for more opportunity. So now from this point on, what we are doing is price should now go into external range liquidity, specifically like the 0 or the fib level. But from here on, since 4-hour has market structure shifted bearish, we want to see daily and 4-hour PDAs, bearish PDAs, get respected, right? So let's go to the daily time frame in that area. We'll just kind of clean this up right here. And you can see we have this up close candle right here. This up close candle, even if you like drew a fib from here to here, the retracement, you can see that it comes up into that area of interest, that Fibonacci OTE area, weekly, goes up into that up close candle, right? And so what I'm going to do is I'm just going to delete everything real quick, and you can kind of see we have that up close candle on the weekly. So whenever price closes below right here, price retraces into that weekly up close candle. This becomes a bearish order block again, and on the 4-hour, that's where we would drop. And as soon as price taps into it, that's whenever you can start looking for that market structure shift bearish, right? So right here, this is where we would have the 3 candle wick swing low right here, creates a new one right here, and then price violates it pretty well, right? So this is a market structure shift bearish in my opinion. It created this displacement, creating these fair value gaps. It closed below all these up close candles. It also disrespected this bullish fair value gap that sent price higher in the past. Also closed below this bullish fair value gap. You know, in my eyes, I would see this as an entry opportunity. And with that being said, I know we're back testing in hindsight, but this is where you have to be honest with yourself. Would you have taken this trade? And for me, I would have. Okay, I would have been like, wow, this is a beautiful like entry opportunity for me. So what I am going to do is I'm going to identify after that market structure shift the PDAs that were created specifically. We have this fair value gap here, and we have this fair value gap here. Okay. And so since there's two, I'm comfortable with risking 1%. I'm going to break it up into two. And right here, we are going ahead and take our first entry at that PDA right there. And stop loss is going to go above the two. And since it's a fair value gap, I'm putting it above. I like to put my stop loss above the one candle of the fair value gap pattern because it does consist of 3 candles with that pattern. So it's going to go above here. And the second entry would be right here, okay? And so we would take our second right here. Boom. Stop loss at the same spot. And for the first one, we're targeting a 1 to 2R. For the second one, we target the same thing. And it's going to be a 1 to 4R actually, which is really nice. But you can see that price actually goes ahead and it taps us into both of them. So 1% is entered right now. And at that very moment, you can kind of see that price swiped us out and it stopped us out. That's totally okay. Now, what I would do is I would consider this like it would negate the market structure shift and I would just kind of go back into looking for it. But what we're going to do before that is we're going to go ahead and we're just going to do what we just did with the previous backtest. So what we're going to do is we are going to take a picture of this here, download image, and we're going to create a new one here. We're going to call it GBP USD. And what day was it on? Now we took that entry. It was like first entry happened February 6th, 2022. 22 February 9th. February 6th, February 9th, Feb 6th, and Feb 2022. And we're going to go ahead and press down. We're going to insert it's all tripping out. Okay, so I'm gonna type in so 4-hour had market structure. Let's write down pre-trade thought process first. This thing is kind of tripping on. Pre-trade process. Or time frame had market structure shifted off. And we were now anticipating price to send lower towards external. And let me be a little bit more specific with this screenshot. As a matter of fact, let's go ahead and write that external range liquidity that we are anticipating it to run into. Let's just draw back on that Fibonacci right here. To draw this from here to here. We'll drop that. And we're gonna put a money bag. You know, get it, enjoy your back test, you guys. We're gonna put a money bag right here. Let's put Where's the money bag? Let's put an emoji. You guys can kind of just see what I'm doing now. I'm just kind of locked in at the moment. Feel free to read what I'm typing, watch what I'm doing, understand what I'm looking for, you guys. I'm writing it all out for you, okay? Don't even worry. Bless you. Bless you. Okay, so now that negated pretty much that entry, we are going to relook for a new market structure shift. You can see that it swept out more liquidity over here, and then it has these lows right here, and this 3 candlewick swing low, then it has this one right here, right? This 3 candlewick swing low gets closed below by this candle. This candle also closes below all of this liquidity right here. Time did it come out? It came in the London session. What we can do is I'm just going to consider it for the sake of back testing. I'm going to market structure shift bearish, and but it didn't close below that. So I'm actually not going to consider it because it came close to closing below it, but it didn't. Okay, let's build our intuition for future reference. Right there, you know what I mean? So we had this down close candle right here, which supported price higher here. Price came back, supported price higher again. Price came back, supported price higher. Price came back, and then it continued to support price higher. So with this market structure shift, again, pay attention to key specifics, and you want to make sure that it's disrespecting old PD arrays that sent price higher and supported price. It's kind of like support and resistance, those areas of sensitivity where price had reactions from. You want to see it get disrespected and then used as itself like a break and retest kind of area. And so right there, that's beautiful that we found that. We are not taking that entry. Three candle wick swing low. We have the three candle wick swing low here, here, here. We're just looking for the three candle wick swing lows right here. Three candle wick swing low right here. Price violates it. But it didn't violate this. This right there, okay? And so keep this candle in mind. This is going to be a bullish order block that sent price higher, okay? And then from there, because yes, that could be a market structure shift, bearish, but it closed within this bullish PDA, and we want to see it disrespect them, okay? So my intuition would not allow me to take that trade. I would want to see better. And you can see right here, there's this three candle wick swing low right here. Price closes below it. And at this point, this is not necessarily displacement in my opinion, but it is a confirmed market structure shift bearish. You have price closing below these up close candles, but again, it's within this order block. At this moment, you can see it closes below that order block. And so from this point, since it's so low, then this has become a range. You can add a Fibonacci to it and measure that range. This becomes your dealing range, right? So this dealing range, you can see that this is your discount area, and within discount, you have this up close candle right here. And that's where you could take entry opportunity. We also have this up close candle here, right? Let's color these red. Okay. So what I will do as well is I will go ahead and place my first position at the 50% level right here. Adding Fibonacci every time off of like a market structure shift and whatnot, it's a judgment call mainly. The reason why it's a judgment call is simply because it's measuring the range. That's why the Fibonacci is used. And so if the range isn't necessarily a good enough range, like for example, like this, you could have added a Fibonacci, right? If you wanted to. And you could say that it retraced into that optimal trade entry area, right? So it's really a judgment call. You could totally do it. And you can be strict and not take any entries unless price taps into that 50%. But price can tap into the first PDA, like this up close candle, which we are going to DCA our 1% because we're comfortable with 1%. We got two PDAs around here, and we're going to DCA the first position at that one just in case price wants to move away from that one, right? And stop loss is going to go above the Fibonacci 100%, okay, on this one. Second entry will go above here. Stop loss would go above that CMA. Okay. Maybe it's a good idea to start placing the stop losses above all those, the last high, right? Because that's technically like the long-term high, that area, right? Anyways, so if we targeted a 1 and 2, you can see that our take profit was hit. Why is there so many entries here? Let's get rid of this one. Take profit 2. Okay. So with this trade setup, I'm going to go ahead and document it as well. We're going to use the same graph here. Well, it all happened on February 22nd. No, wrong one. Just a little bit, please. You're okay. You could have it up. That's not a problem. It's okay. What's going on? Price should continue to then tap into 4 hour and daily PDAs, and that's whenever you can drop to lower time frames. But realistically, we're not necessarily doing that because I am sticking strictly to taking entries off the 4 hour time frame. I don't care to take entries off at any other time frame, but the 4 hour is what I am starting to appreciate more with my trading. So, that being said, what we're going to do, since there's no more 4 hour or daily, since there's no more like weekly PDAs, let's see if there's any more weekly PDAs within that leg. What we would want to see now is from here, since it's the market maker sell model and we're targeting this low, we anticipate that the weekly candles should power of three, open, high, low, close, and tap into, 4 hour PDAs. So right here, and that's going to be our entry, okay? So right here, we have this first one here, this price, and we have the next one right here. So we'll forget about this one for now, but we're going to go to the 4 hour and we're going to see how that weekly candle opened on Sunday. So it was right here, Sunday opened and it went high. What is it going high into? It's going high into this 4-hour order block right here, and this 4-hour. So this 4-hour order block and this 4-hour fair value gap right here. Okay, so right here, We are looking for a weekly open, high, low, and close and whatnot. And we're looking for that weekly to open and go high, manipulate into 4 hour bearish PDAs, which you can see right here. We have that fair value gap and that candle right there. And so my first entry came at, it looks like it was February 28th at 1. Second entry came at 5. February 28th. All right, all right, all right. We back tested for a solid hour right there. My brain needs a little bit of a break. And so we are going to resume our back testing in the next video, you guys. Our back tested account is up a 5% right now, 5.14%. All of those trades were back tested within this video. Um, Little keynotes and things that I could take away from this video is on the market structure shift. I would probably look for the PDA that price respected before the market structure shift happened, and you want to see that PDA get disrespected during the market structure shift. Another one is like stop losses. I would just put them above like the long-term high or like the long-term low, like the specifically the highest wick or the lowest wick that you would draw your Fibonacci range point off of, if that makes sense. If that doesn't make sense, watch this video and you'll kind of get an idea of what I mean by that. I did mention it. And then another thing to note too is like with the weekly, um, if targeting like the weekly low external range liquidity is going to be a lot more profitable long term versus just targeting 1 to 2 hours, you know what I mean? I think those are some key takeaways that I got from this session that might be beneficial to keep in mind going forward. And again, you guys, we have a live, um, we're live testing the same approach in the live markets, and we're going to be documenting our emotions and everything else. And I'm sending those live trade setup ideas in our free Telegram. If you're not already in that group, go join the group. The description is going to be the description. The link is going to be in the description down below. Go join that group, you guys. Go get some knowledge and continue to join in on these videos. You're going to continue to get more gems from me in the future. So thank you again for watching. If you got some value, drop a like, comment if you want me to touch on anything specific, and subscribe for more. Click that bell so you know when we upload. We'll see you in the next video. Later.